Congratulations! Your loan is conditionally approved. A SunWest loan originator is always on top of her approvals, no matter where she is. Break free with Morgan.
Welcome to The Interest. I'm Katie Jensen. We all know it's a difficult time for the housing industry, and those challenges extend to all corners. Not only mortgage lenders, but also the warehouse lenders, vendors, title companies, and real estate agents that support the housing and mortgage finance ecosystem. Over the past 24 months, there has been a sharp pivot from historically high origination volume, spurred by record low interest rates, to a rapid slowdown in home sales and origination volume driven by high interest rates and tight inventory. The MBA says that total origination volume was cut in half from an all-time high in 2021 of $4.44 trillion to $2.25 trillion in 2022. It expects originations to be even lower by the end of 2023. Some 600,000 real estate agents have left the business. New mortgage insurance written and title insurance revenues are down sharply. We have seen a number of lenders merge or exit the mortgage origination business, and we are now seeing some institutions exit the mortgage warehouse lending business. In a recent blog post, Bob Brokesmith, president and CEO of the MBA, says we should see this for what it is, a recalibration of the market. But when it comes to warehouse lending, it, quote, is an essential and irreplaceable form of liquidity for the mortgage market, connecting Wall Street to Main Street to provide broad mortgage credit access for borrowers across the country. He suggests reducing the risk on warehouse lending facilities to align with the risk on underlying collateral. Under current rules, a warehouse line secured by single-family loans is assigned 100% risk weight. If those same loans were taken on balance sheet by the bank in an event of a default, by the mortgage company, the risk weighting would be cut in half. Brokesmith says this makes no sense. He also suggests regulators should allow advances against warehouse lines of credit. Coming up, when the market does turn around, who do you want to have in your pipeline?
People talking, but they just don't know. It's in my heart why I love you so. I love you, baby, like a mine of love gold. Come on, sugar, let the good times roll.
Join us in New Orleans July 11th for Ultimate Mortgage Expo at Hotel Monteleone. Make connections with the best in the industry that will elevate your career to new levels.
A lot of people live in make-believe. They keep a lot going up their sleeve. But baby, my love ain't the kind that folds. Come on, sugar, let the good times roll.
Ultimate Mortgage Expo, the Gulf Coast ultimate gathering for mortgage professionals. Go to nmplink.com/ultimate and register today for free with promo code NMPFREE.
Welcome back. What goes up must come down, and when the market turns around, you're going to want to make sure you secure a relationship with the younger generation. Our own Christine Stewart tells you why.
We see a tremendous amount of clients under the age of 30 and under 20, call it younger, newer investors that have entered the marketplace.
They're tech-savvy, pragmatic, and some even say natural-born investors. It's only a matter of time before millennials and Gen Zers take over the real estate market.
Real estate right now, in this new world that we live in, whether it be through social media or other functions, we're seeing more and more people develop that at an earlier stage.
Originators who focused on younger buyers are setting themselves up to reap greater rewards later on. Because they have an investor mindset, they will likely have more transactions throughout their lifetime compared to older generations. This means it's important for originators to build trust with millennials and Gen Zers so they form a long-term relationship.
We always frame it as a mortgage consultation, never, just an application. We're going to be, an advisor in the same way that an attorney or a financial advisor or a CPA is kind of critical to growing a business.
One of the most popular strategies among younger homebuyers and aspiring real estate investors is house hacking a multifamily home with an FHA loan.
With 3.5% down, and then, live there a year or two. This is particularly good for the folks that, don't have children yet.
Originators should prepare themselves by exploring strategies that work for borrowers with lower startup capital who plan to live in the home for a few years.
I think a single family rental is a great way to dip your feet in the water, but you just have to put a tenant in there that generates income over top of your mortgage payment. That's pretty hands-off.
To learn more about young homebuyers and what they're looking for in a loan officer, check out the June issue of Mortgage Banker magazine at mortgagebankermag.com. For The Interest, I'm Christine Stewart.
Thanks, Christine. For more on these and all of today's top stories, go to nationalmortgageprofessional.com.